Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps still hovering near the 50-day moving average at 2450. Yeah, we've made a few moves away from it and back to it and above it, but it's really, we've traded inside the August month range, and we've been having trouble getting outside of that. And there's a lot of uncertainty in the marketplace, which I think is part of the deal here. But that 50-day moving average has been acting like a magnet until we get some clarity out of Washington, until we get some clarity out of the damages and the catastrophic returns that we may see, insurance claims we may see down in Florida or in Texas. All that's going to weigh heavy on the stock market, and I think it's going to kind of keep us within that range, at least for the short term. Now, volatility will tell you that while things are kind of hovering inside of the range, we're not seeing volatility dip down to those way low levels that we've seen all year. Remember when we had the VIX trading below 10 for how many days in a row, and it seemed like there was no volatility in the equity market. And then we got a few blips higher, and now we're hovering the VIX at around 11. Yeah, that's not a lot to write home about, but it certainly is better than what we'd seen for most of this year. So the stock market now showing a slight less subdued volatility, we'll call it. But again, that's volatility none the same, and it means that the market is anticipating some kind of a move, whether it means a new high on the horizon or back trading to new lows. I think right now we don't know that until we get more information. And lastly, let's talk about Irma. Irma's been weighing on this market because we just got through Harvey, and it seemed that the stock market made it through okay, at least, especially with potential catastrophic claims coming out of insurance companies and banks, and it seemed to make it through just fine. And now we've got Irma, and that's really going to weigh on the market because could be bigger and more damaging. And I think that until we get those numbers in next week, until Irma comes and goes, and hopefully we'll blow out to sea sooner than later, that is going to also weigh on the market because that's real dollars that are being moved out of the banks and into the people's hands, and that's real return to the shareholder that's not going to be experienced. So right now, I think all eyes are on Irma. The stock market's not really concerned about geopolitical risk. It's not concerned about the Fed. Low rates don't concern the stock market, given the fact that it's rallied so long, going back to 2009. So right now, we have to get through this weekend, and then we'll have a little bit of clarity, and I think it'll be smooth sailing into the end of the year for stocks, especially with 10-year yields nearing 2%. This has been Todd Colvin coming to you from the floor of the CME Group.